What's up, guys? Eric here, Mr. Fired Up Wealth. And if you know the channel, you know we like to talk about disruptive technology, disruptive tech. How do we outperform the stock market so that we can retire young and we can enjoy life? Well, what about the real estate sector? What disruptive technology stocks can we look at in the real estate sector? We've covered Zillow Group before. What about Opendoor? Is Opendoor stock a buy? What's up, guys? Eric here, Mr. Fired Up Wealth, and this is probably going to be my last video of 2020. I can't thank you enough. I appreciate all your support for the great year. It's been an interesting year, but in terms of your support, it's been excellent. If you have not subscribed to the channel, please do, because 2021 is going to be an excellent year. Now, today I'm going to do something a little different. I'm going to give you some real quick information. Normally, I spend 20, 30 minutes doing all the due diligence, going through everything. I'm going to give you some real high level information on Opendoor, whether or not you should buy the stock or not. I'm going to explain my opinions and even show you some technicals. It's not a very long video, so please watch the video in its entirety. Let's get started. So this is Eric Wu. He's the co-founder and CEO of Opendoor. So what's going on with these guys? So right now they have 6 markets and they've reached a $2.7 billion run rate revenue in Q1 of 2020. So you can see 6 markets, 3.2% market share, and $2.7 billion in run rate revenue. Las Vegas, Phoenix, Dallas-Fort Worth, Atlanta, Orlando, and Raleigh-Durham. The largest market share is in Raleigh at 5.5%, and they're growing. They're trying to go to the others. They've got 1.7% Dallas-Fort Worth, 1.5% Orlando, and so on. So right now, they're actually in 21 markets. They're just scratching the surface. They're trying to grow these markets. They're in 21 different markets with 2% market share and a $5 billion run rate revenue. You can see Portland, mostly in the south and on the coast. There's Minneapolis, St. Paul. Where are they trying to go? They're trying to get to a $50 billion revenue run rate. This is their playbook. They want 4% market share in 100 markets with a $50 billion revenue run rate. You can see most of the major cities are covered on this map. They're trying to grow a lot. So what? So what I'm going to do next, I'm going to show you 3 articles from the same exact website with different perspectives. And then I'm going to give you my perspective, my opinion, and show you a chart. So the first one, this is Investor Place, and this is saying, get into real estate with disruptive tech play Opendoor. With its SPAC merger complete, expect Open stock to head higher. Well, the last few days, it has not been heading higher. It's been selling off every single day. So is it a buy? Is it going to go lower? What's going on? So what this author is saying right here is he's saying that Opendoor is disrupting the industry. They're using algorithms to provide instant quotes, et cetera, et cetera, et cetera. With its total addressable market topping $1.6 trillion, there's plenty of runway ahead. The company itself estimates it can one day generate $50 billion in annual sales. Given this blockbuster growth potential, don't split hairs over valuation. Now is the time to enter position. The tech disruption of residential real estate isn't going anywhere, and this is one of the best ways to play the trend. Well, that sounds pretty good. What else is going on? Same website, different author, title. If you think the market's a bubble, Opendoor is Exhibit A. So this is from a different author saying that it's way over expensive, way overvalued. The monster valuation behind IPOB stock, now it's trading as Open because the acquisition has occurred, has been completed. And they're saying that the market capitalization is $16.4 billion. That's a huge number. Opendoor expects revenues of $2.5 billion this year, which is 6.5x revenue. Actually, not that high, but it's saying it doesn't seem necessarily like a big multiple, but Opendoor's revenue is not all that profitable. The company is targeting EBITDA, earnings before interest, taxes, depreciation, and amortization margins of just 4 to 6%. Well, this is very, very bearish. What does this one say? Well, this one, Opendoor Technologies, is worth 161% more now that its SPAC merger is closed. This is from Mark Hake. He's a CFA. He is saying that he believes the stock is severely undervalued, and it's worth at least 161% above the price it was at December 18th. He thinks it's worth $77.19 a share. It's trading right now at $24.50. So is the stock a buy? Let's look at a chart. All right, this is TradingView, guys. It's a quick chart on Opendoor. The ticker is OPEN, O-P-E-N. Now, I've drawn a couple of red channels you can see on your screen. You can see it's bounced off of that, $18.06, 1807, 1901. It's bounced up all the way to 32.50, bounced to 33, 34, kind of came back down and just fell off a cliff. It's been selling nonstop. In fact, just in the last few minutes, it's gone down even a little bit lower. So now it's trading at $24.25. It got as low yesterday as $22.03. Now, if you look at the pivot points, this is just using traditional pivot points on TradingView. You can change these to Fibonacci's, classic, whatever. Just using traditional, it shows it could easily come back down to say $22.66, $22.50, somewhere in that range. Now, it obviously broke that. So that means it could, easily go down to $18.84, which is the next pivot point, the S3. What I think it's going to do, and I'm not a financial advisor, I can't tell you what to buy or to sell. I'm giving you my opinions based on the information I have, the data I have. I'm trying to share the information. You make your own decision. But what I think is going to happen is I think it's probably going to bottom out somewhere in this range here and probably go higher. I think this stock is probably worth closer to $50 in 2021, which is 100% upside from here. You saw the other author of the article I showed you earlier, he thinks it's worth $77. So I think there's upside. Now, why do I think that? I think there's upside for a few different reasons. Now, I first want to say this. If I were to buy one stock in this space, if I were to buy one between Zillow Group, Redfin, and Opendoor, I believe that Zillow Group is the best of breed. I do own that stock. It has the best market share. And I am very bullish long-term on Zillow Group. I think Redfin, and there's plenty of market share for all of them to survive. I like Opendoor as a spec. That's speculation. I'm speculating that they can grow into that total addressable market, that their playbook will come to fruition. Now, I think the management team is set up pretty well. I think they have a pretty good management team. And that even if they get close to what they're predicting, what their playbook says they can get to, I think that the company and the stock can do pretty well. Now, again, I like Zillow Group as the best of breed. I like Opendoor as speculation. When it comes down to it, can the stock go lower? Absolutely. With any kind of market, there's buyers and sellers. I think there's probably enough buyers pretty close in this range where it's at 22 and above. That's going to keep that price, in that range, and it's going to go higher. It can always go lower, but I'm thinking long term. I'm thinking 12 months, 24 months, 36 months. What is this stock going to be worth in a couple of years? That's what I'm doing when I'm investing in speculative type stocks. I'm generally holding them for a long period of time with the idea that they're going to outperform the market. I'm trying to outperform the market with a basket of stocks. So I might have a $100,000 portfolio. I might have $10,000 in spec, and I might have $1,000 in each stock, and I'm trying to outperform that bucket. But anyway, if you're interested in that and that methodology and how we do things in Fired Up Wealth, definitely check out Facebook, check out Patreon. Love to have you there. At the very minimum, subscribe, because you're not going to want to miss what's coming to Fired Up Wealth in 2021. It's going to be a fantastic year. In the meantime, enjoy your New Year's. Have a great rest of your day. Take care.